Hi everyone, hope you're all doing well. Today I'm going to talk about a brand new stock I bought a couple of weeks ago into the US portfolio. So yeah, normally I'm being quite active buying UK stocks at the moment, but I did actually buy a brand new US stock, which is the first time I bought a brand new US stock for a good few months now. So I'll talk you through that stock and why I'm buying it as well. Hope you enjoyed the video, guys. Hit the like button if you're new around here, subscribe. Let's get started. Now, I did first post about this stock on the Discord, on the Patreon. We did a stock request on it, and no, it's not CVS, but this is the one that I've done this weekend. So if you do join the Patreon, you do get 2 exclusive videos a week on there, and one of them is a stock request where members of the Discord get to vote for the stock I take a look at, and the winner this week was CVS, which is a very interesting stock. So do take a look at that if you do want to have a new UK stock to look at. And right now you can join the Discord, the private community, for only £44 for the full year, something like £3.40 a month for over 100 exclusive videos on there, and also get the Discord to talk to members of the JKR community, including me. If you do want that, send me an email, jkinvesting@gmail.com. It'll be in the description as well. That is only running to this weekend, and then it's done, guys. And as well as that, Webull have brought back their offer that they had on the free shares, which is very impressive. So if you deposit £100 with the link in the description, you get 5 free fractional shares. And if you keep that money in the account for 90 days, then you get another 5 free fractional shares. Works out as about £40, guys. So go treat yourself, go get them free shares, and you can go get yourself a free Nando's. Or you could go get the free shares for £40, and then you can also join the JKR private community for free. Winner, winner, eh? But getting on to the video today. So it first came up in August time. We did this video on the Patreon on gambling.com, which members of the Discord voted for me to take a look at this. And I think the kind of main culprit for this was Matty. Obviously you guys on the Discord will know Matty. He was a big fan of this one, and he said for me to go take a look at it. And that's what I did. So it's been on my watch list since August, and to be fair, since August the stock has absolutely rallied massively since that time frame. The stock is up huge. Although I have only recently been a buyer, so for me I'm only up around 10% up on the position, but I'll make you guys aware of that I was buying a little bit cheaper than where the stock currently is at right now. But gambling.com is definitely a very interesting stock, and that is why I bought the stock. So what does the company do? Gambling.com is a service provider, a marketing company to global online gambling sites. So basically what they do is they do advertising. They get people to join through their website, and then they direct them to the online casinos or sportsbook. So an example would be like booking.com. You're trying to look for a hotel, you go on booking.com and then you search through the deals, and then you choose the best deal, and then you go directly onto the hotel website and then you book through them. That's exactly the same what gambling.com do. They will use one of their many sites that they have to say to you which betting company you would want to use, and then what they would do is then they would direct you to the betting company, whether it be the likes of Bet365, DraftKings, FanDuel, and you can see the top 10 customers make up about 48% of the sales, but no customer has more than 16% exposure, which is okay. So they do have a bit of a diverse income, as you can see here. And when you do look at the numbers, very good numbers. Founded in 2006, 18 years in the business. So this isn't a new company. This has been a company that's been around for the start of really online gambling, and the growth has been very good in revenue and in net income. And you can see from 2023, they did generate 425,000 players for the clients and 273,000 in 2022, so that is very good. Also 42% organic revenue growth, and they do have 50 websites in 15 national markets, so they don't have just exposure to the UK or the US. They're definitely very diverse, as you can see here. Now, they have had pretty good sustainability in the likes of Europe. That's a pretty mature market for them now, especially in the likes of the United Kingdom, for example. But there's opportunity growth. There's opportunity growth in Latin America, where we've just seen the likes of Mexico and Brazil starting to launch online sports betting and online iGaming. And of course, the US. We've seen this before with the likes of DraftKings. The US is booming massively because what has happened is the US have only just, well, not only just, in the last kind of 4 or 5 years, started to allow online sports betting and online iGaming. For us in the UK, that's absolutely bonkers. Obviously, we've had it for years, but in the US, they've only just allowed it to happen, and slowly there is a few states starting to do online sports betting and online iGaming. And what we are expecting to see is the US become the #1 market in the world. So there's definitely a lot of growth, as you can see here. Gambling.com is currently the #1 provider of directing these clients to potential providers of iGaming and also sportsbooks. And as you can see here, the growth in the US is huge. We've seen this before, like we said, with the likes of DraftKings, for example. We see the start of the states coming online for sports betting and potentially iGaming as well. iGaming has the potential to be even more profitable and more revenue than the online sports betting as well, which is a really exciting thing that I have here. And we can see here the growth of this category is going to be massive in the next few years. Now, looking at the company, you can see here the growth has been very good the last few years. They have had a very good track performance, as you can see here. Profitability wise, very good amounts of profitability as well in the business. And that does mean they have actually got a very good balance sheet. If we look here, there is currently 19% debt to equity. And then when we look at the cash pile as well, very nice cash pile as we have on the company here. Ownership wise, it is a founder led company as well. And they do own a good chunk of the business, which is also great to see. And because the company is so profitable, the company is at the moment buying back good amounts of the stock here. Now you might be thinking, well, why was I so slow to kind of buy the stock? Because I covered this on August time, and on that video there, if you guys on the Patreon watched the video, you would have seen me said, I really like this stock, but why didn't I buy? So I did have some couple of concerns around the business. One of them was the DraftKings position. Obviously, I have quite big exposure in this space already, and I thought, you know what, I don't know if I want to have more exposure in this space. But looking at the results that they've had recently, I thought, you know what, I'm going to have to buy some. So I did actually cash in a good chunk of my DraftKings position to go buy this stock, and that kind of reduced that. I wasn't getting any more exposure. I locked in profit with DraftKings and I was able to use that profit to go buy that stock. So I kind of balanced the position out from that point of view. And the other thing that I had a concern around was the Google changes. So at the start of the year, which I think was the actual Q2 earnings, the Q1 earnings. So when they actually reported the Q1 earnings, they were actually okay. Revenue was up 9%, net income was up 11%. But they did downgrade their guidance in this quarter. They basically said that Google made some changes to the search engine and we are struggling to adapt to the changes in the Google search engine. And I thought, oh, if this happens, this could be the biggest concern that I have, and can they come back from these changes in Google search engine? How quick are they able to adapt? The answer to that was they can adapt very quickly, because by the time we've got to the third quarter, they have totally adapted to the changes in the Google search engine. So even though this is probably the biggest risk with this company, is that there'll be, well, I guess you could say regulation to the gaming space or the gambling space is a risk. The other one would be changing the Google search engine. And if it's changing the Google search engine, maybe that does affect them. But as we've seen here, they have done very well to adapt since that Q1 concerns. And if we do look at the recent quarter, it was very, very good. If we look at revenue, it grew 37% year over year. If we look at net income, it grew 70% year over year. Free cash flow was up 802% year over year. Adjusted EBITDA was up 108% year over year. So yeah, even though this was the concern that I had when I did this video this one, when I did the video last time, that was my concern. My DraftKings position, which I kind of sorted because I sold some of DraftKings position to go buy this stock. And the other concern that I had was that there was the changes in the Google search engine, which to me on the recent quarter kind of said, actually, we can adapt to this very quickly. And these numbers have bounced up very well. So I looked at the company and I looked at the valuation, and I thought at 16 times earnings for the company that's going to be growing at decent rates, I'm going to be buying this stock here. Now, last time I run the numbers on the Patreon, you can see here the stock was $8. This was the upside I was getting on the stock. So we were getting 37% on the low side, which obviously in the low side, this was 5% revenue growth, 17% profit margins, and 20 times earnings. When you're getting 37% on the low side, that's obviously a really good sign. I really like that when I'm getting on the low side, still very good upside. On the medium side, we're getting 94% upside, and on the high side, we're getting 300% upside. So you can see here, when I was running the numbers for you guys on the Patreon, I was like, yep, you know, I'm rating this a buy because of these reasons. But now I've got to update the numbers, and now the stock is actually a 485 million market cap. However, there has been an upgrade on the profitability side. Actually, these numbers are for this year. They're actually going to do 126 million now compared to the 120 million that I did last time. And from a profit margin point of view, I thought, can they get to 23% profit margins? If we actually have a look at the recent earnings, they're actually now at a 23% profit margin already. So they've already got to what I thought maybe they could do within a month's time. So what I've done is I've upgraded the revenue guidance from last time I covered it on Patreon, and I've upgraded the profit margins as well. I've kept it at 20 times earnings, and there's still relatively decent upside from when I last covered it on Patreon. So I'm liking that, because on the mid side I can still walk away with decent amounts, on the high side there's still decent amounts, and on the low side I still come out with money. The only thing that will be very exciting for this business, obviously I've put 20 times earnings down, the market average. I think a company doing these numbers will go to the market average valuation. The only other thing that will be very exciting for this business is if it has metric expansion. If we do talk about a company that then starts getting valued at, let's say, 25 times earnings, for example, and let me just update these numbers to 25 times earnings. Oh, sorry, the last number was already on 30 times earnings. Let me just do that for 20. So on the high side, it would actually be 136%. Sorry about that. But if we update that now to 25 times earnings, it's still 195% upside. So yeah, it looks like there's still potential upside for this stock. I think that potentially we could see Gambling.com start ticking over to the $20 mark in the next few years. It's still got major catalysts of the states coming line on the US side of it. And as well as that, let's not forget, it's a pretty profitable company. They can use that to go buy other sites, which they sometimes do. They keep adding on to the site list, like free bets, for example. But also the other thing they could potentially do is do share buybacks, which they currently are doing at the moment as well, which obviously makes it more attractive as well. So yeah, I just thought I'd diverse a little bit out of that DraftKings position a little bit now, and this was a good stock to kind of use some of that money in there. And I bought here. Ideally, what's going to happen here is that I probably won't buy any more at these levels. So I will let the stock run from here. Ideally, I want the stock to drop, and I can buy the stock at cheaper rates. So either the stock runs up here, from here, and I'm a winner because I've already bought a position. But ideally, the stock drops another 10-20%, and I can start building up a bit more of a full position. Because I'd ideally like the stock to go back down to like a 400 million market cap. If the stock could go back down to like a 400 million market cap, that would be a lot better, where I'd prefer to buy. But we'll see what happens. So yeah, that's the new stock I bought anyway, guys. And yeah, doing quite well already, but hopefully it goes lower and I can buy some more shares. We'll see what happens. Hope you enjoyed the video, guys. Remember, if you do want to join the private group, send me an email, jcowisting@gmail.com, and obviously get access to that Webull offer, because if you do and you get those free shares, it might pay for your Patreon on the Black Friday sale for a year, and then you've got it for free. Anyway, hope you enjoyed the video, guys. See you in a bit.